You mentioned AI. Can we spend a bit of time talking about artificial intelligence? How do you feel about this AI over investment that some people are fearing, that financial rewards may be limited or delayed given all these high levels of investments, the impact on software services, which have seen their shares smashed lately? These fears, are they real or do you think they're overblown?
A combination. They are real and they are overblown. Some of the reactions with the stock prices, with some of them down 30-40% over the week, particularly on the specific sectors within technology. But let's just take it from a granular level. AI, the contribution. So what's happening in the United States? There is an investment, and yes, it can be an overinvestment that can be clawed back and leveled out in 3-5 years. But that AI contribution means the following: that you get a productivity gain. So accelerating GDP with a productivity gain implies there's no inflationary aspects of it. And that is verified in the US, as an example, in what we call the break evens for 3-5 year bonds and even out to the 10 years. That's the verification. Now, that's the opposite very quickly in Australia. We got no productivity gains, accelerating GDP equals inflation. So let's just go back to the AI. There is an overinvestment in the short term that will play itself out, but there is a contribution that we believe will be around 15 to 20% of the earnings upside for this year is coming from productivity gains of AI. And that in itself, if it comes in at 15%, that's a downgrade. If it comes in just above 20% contribution, it's an upgrade. But there's a lot of money going into it, coming through on the cash flows and verified in the earnings. But again, that's how you look at it, is that overinvestment, yes. Where do we land? We don't know, but it is pro GDP and it's good because it's disinflationary, all things being equal. Hopefully that was a succinct way of summarizing a very big topic.